Hello and welcome to the Trading Zone. I am Joe Teague, portfolio manager at Equity Armor Investments. Thank you for tuning in. Thank you for joining us. It means the world to me to have y'all here. And I want to just get right into it. This is Trading Zone. I'm Joe Teague. And today we'll be talking about the yield curve. The yield curve is getting steeper today. The 10-year is rising relative to the 2-year. A lot of speculation out there that's related to the debate performance that happened Thursday night. People are putting a higher probability of a Trump election victory and are moving the yield curve accordingly. I'll explain why as we get further on into the show. Now, big week ahead of us. Of course, there is a 4th of July holiday. That is a day off, less trading. Usually that suppresses volatility, but we also have Jobs Friday. That's a key economic data point. It's going to be moving those interest rates, like I mentioned. That is a puller on volatility. There's a tug of war, suppressing volatility and rising volatility right now. We'll see how that plays out. Certainly after the holiday, volatility will come up, but after the jobs number, volatility will come down. So we'll watch how it plays out. Now, remember, we're expecting more volatility the closer we get to the election. October VIX future is way higher. So as time goes on, as we get further into the summer months, we'll get through a lot of these lighter trading days into the fall. We'll really start to see volatility pick up then, especially starting in September, October, November. Can't wait for that. Now, this is a 2-year trend. I have been focusing in here on a lot here. We have this upward channel, which we broke through. Now we have like a higher upward channel. Hit that critical spot here, right here back in April. We had a little bit of a sell-off in April, found this support line, rallied off of that. It's kind of interesting right now. We're almost looking at a similar type of a situation on this upward channel. Are we going to come back down and hit this spot as support here? We'll wait and see how that plays out. But, I'm still feeling very optimistic about this market. This trend is very positive. We've had some pullbacks along the way, but it's been undeniably an upward channel as we have gone in. Now, something we look at every week, of course, is the skew. This is the price of the puts in the S&P 500, 25 delta puts versus the 25 delta calls in the S&P 500. This is a tendency to lead volatility. This usually turns around before the indexes do, something that Brian and I pay close attention to every single day. Right now, we've made a higher high relatively on the short term here, this week or so in this index. It looks like volatility is going to be trending higher. So we're waiting for this going to turn around. Obviously, over the past 2 years, it's been making progressive lower highs here. So we'll wait and see if that continues. At some point, that's going to snap out, and we're going to see a big volatility pump. Is that going to be coinciding with the election or sooner? We'll wait and see how that all plays out. Now, like I was talking about, you watched us last week, you brought this up, the VIX future curve. 2 months ago, it was the highest. It's come down and down. Right now, the VIX currently is at the lowest spot, but the curve is the steepest, and it gets even steeper dramatically. So when you look at the October month, which remember is the November S&P 500 options, which is when the election is. So this is a very steep yield curve. Volatility is low, but they're expecting it to come back, and especially expecting it to come back around the election. I've been talking about how crucial oil is too. Oil is on the rise, hasn't made like a new high here back from April. I think it'd be great for the market if this were to turn around and trend back lower. There's a lot of positioning in CTAs and hedge funds short oil right now. Maybe that's what's driving it higher. But this would be great for the market if this were to turn around, and really would be a big trouble spot for the market if it does make a new high here. If we don't get above this $86, $87 area, that would be a big issue for me and a concern that the S&P 500 trend might not be able to hold itself if that were to happen. Now, let's move it on into the big story of the day. We're looking at the 2-10 yield curve. Yes, this is negative. Historically, we talk about how a negative yield curve leads to a recession, but today it's having a big upward move. And that's kind of important to think about. Now, people talk about how this is a recession indicator. If you look back and you see, oh, these are times right before the recession when this yield curve was negative. You can see right here in 99, in 2007, and here we are right now. Well, what happened when this yield curve went higher, went from negative to positive? Well, that's when the off. So yes, this yield curve was negative for a long time here in 06 and 07, but it didn't really sell off until it flipped back into the positive side. So that's what we're worrying about now. Now we're nowhere near positive still. I just point that out. But let's just take a deeper dive here. Okay, we got the negative yield curve. So normally the yield curve is a negative, like I showed you. Typically, the short-term interest rates, this should say long-term interest rates are higher than the short-term. So people are looking for a positive yield curve. There's people want more yield to lock their money up for a longer period of time. That's why the yield curve usually is a positive flip. Negative flip would mean the investors are pessimistic about the rate outlook for the short term. They expect interest rates to fall soon. So, and that's why a negative interest rate predicts a recession. And when the 2-year falls to drive this yield curve back to positive, the recession is here. But what's happening actually today is yields are up, and the 10-year is up more than the 2-year. That's why it's dramatically flattening out. We're looking at this trend line here in the 10-year. We're just getting it back up closer to that higher end of its range. So that's interesting to note. That's not necessarily great for growth stocks, but it's not like things are falling out of bed and the economy is collapsing. So people were talking about how this was election related after the debate. People were pricing in what would happen to the market, the economy with a Trump victory. Well, this is essentially what they're thinking. What the market's saying is, why would the back end of the yield curve rise? Well, they think that growth will be better than previously thought, and inflation will be higher than previously thought. So that's what people might be predicting for Trump presidency number 2. Maybe some rate cuts, maybe some not rate. Maybe Trump does like to pressure the Fed into rate cuts, but maybe some tax cuts too that could do both of these things. So that's what we're looking at, and perhaps one beneficiary of that would be the bank. So let's move that into the stock of the week. Going to be leading off earnings coming up soon. JP Morgan having earnings in July 12th. So the July 12th 205 call strike has 14,000 open interest. So that's a lot of open interest. No other strike has over 3,000, and most of the strikes are below 1,000. So calls are really outpacing puts 2-1 here. This is a massive inflection point here. People are really expecting a big move for this earnings. Now, earnings usually aren't so big for banks, and especially JP Morgan. So historically, it's a 3 or 2% move. But right now, the market is pricing in a move of 3% on this. So, a lot more than historical. So they're looking for some upside. And maybe here's what the traders are seeing when they're looking at this chart. They see this trend line here, kind of looks similar to a lot of stocks out there. And it's breaking out, making new all-time highs. We know they do better when the yield curve is more steep for them. We're certainly not steep yet, but certainly going to do better if there's more economic activity. And they've just had a tremendous run over the past year and a half. So this is them over the past year here. And let's take a look. Put your guesses out there in chat if you can figure out who this is up against. So they look a lot like some of the Mag 7 names. They've just had a tremendous run up, like a lot of the other big tech names out there. So this is actually JP Morgan and Amazon. So they almost look identical here. Amazon last week, big run up. JP Morgan a big run up too. We'll see if JP Morgan can push everything forward and lead this market forward with a good earnings report. My trade of JP Morgan will be to follow along with the crowd. buying those 205 calls. I'm going to look at buying the August 205 220 call spread. I'll lay out $5.40 for that. My break even, I need JP Morgan to get above 210.40 by August expiration to break even, but I will be up $9.60, so about a 2-to-1 return to get over 220 by expiration. Fingers crossed, 3% move like the market makers are pricing in. I will be there, and fingers crossed we can run up through August like expected. So we'll watch and see how that plays out. I will be updating you next week on this trade. Speaking of which, I had a trade last week and the week before. I was looking at Apple, and I had sold the 205 put, bought the 220, 240 call spread. Last week, it was a 50-cent credit, this trade. 2 weeks ago, it was 2.25. Today, it's back up to 185. I think this is a trade I still want to own for the long haul. I think it's going to race through this, get closer to 220. I'm running out of time here, though, so I've only got 3 more weeks now left on this trade, so I'll be watching this closely, but I still like my chances here, and it's looking really good today especially. Make sure you tune in here every week at 1 p.m. Eastern for the Trading Zone. I'm Joe Teague of Equity Armor Investments. It's great to have you. Always remember, and give me some comments, whatever. Make sure you tune in every week at 1 p.m. Eastern, and I will be seeing you soon.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.